The housing bubble is letting out air faster and faster each week. In June, fewer homes were under contract to be sold, while more homes were on the market. The reason for this is that mortgage rates have gone up a lot in the last few months. In June, pending home sales fell by 16% compared to the same month last year. This comes after a drop of 12% in May and a drop of 9% in April. In June, pending sales fell for the 10th month in a row compared to the same month last year. There's an ever-growing list of homes under contract but have yet to close. In May, sales of already built homes fell to their lowest level in 2 years. As sales go down, supply goes up. In June, the number of homes for sale rose by 20% from the previous month to 562,000. The number of listings is up 19% from a year ago. It was the second month in a row that listings went up. In May, listings went up by 8%. The inventory went up in May for the first time since June 2019. The National Association of Realtors says that there were 98,000 more homes for sale last month than there were a year ago. The average rate for a 30-year mortgage has dropped from its recent high of close to 6.4% to its current level of around 5.5%. The last time mortgage rates were over 6% was right before the housing crash of 2008. Rates on mortgages were between 4% and 5% until about the middle of April. Rising mortgage rates have already made it too expensive for people with less money to buy a home. Most of the houses that sell are in the higher price ranges. Since the market is slowing down, more sellers are having to lower their prices. In June, price cuts went up by 50% from the previous month and nearly doubled from the previous year. House showings are down, and bidding wars are a thing of the past, so sellers are trying to get buyers to come by and take a look. The combination of rising mortgage rates and a 40% rise in home prices over the last 2 years is a toxic mix. As shadow inventory hits the market, it's likely that the number of items for sale will keep going up. When many people bought new homes, they didn't sell their old ones right away. They wanted to make more money by riding the rising home prices. Since the housing bubble is starting to pop, these people want to sell. In the coming months, the number of items for sale could grow at a faster rate, which would put more downward pressure on prices. Since the Federal Reserve raised its base rate by 75 basis points and most people expect another 0.75% increase in July, mortgage rates are likely to keep going up quickly. The housing market is the sector most sensitive to interest rates, and it's slowing down. This is just one way that the government and the Federal Reserve's response during this pandemic messed up the economy. The Fed blew up a housing bubble when it lowered interest rates artificially and bought mortgage-backed securities worth billions of dollars. Now that the rates have gone up, the central bank has popped the bubble. The Fed is taking away what it has given. Late in 2018, mortgage rates started to go down as the economy got worse and the Federal Reserve stopped their raising rates post-2008. As the Fed went back to quantitative easing, rates kept going down. When the virus hit, the Fed cut rates even more and did QE indefinitely, which sent rates through the floor. The big jump in mortgage rates we're seeing now began when the Fed started talking about monetary tightening as a way to stop inflation from getting out of hand. It's clear that the housing bubble will keep going down for the rest of 2022. I don't know how fast the air will come out all at once or what will happen to the economy as a whole. One thing is certain. The current housing bubble will change the idea of affordable housing as corporate landlords buy up a lot of homes and change the American dream of home ownership. Now, what do you think? Where is all this heading? I'm curious to hear your thoughts. Thanks for watching this update on the state of the housing market. Recent measurements show that things look a lot worse now than they did during the last housing crisis in 2008. Find out more about how the Fed's experiment with raising interest rates will pop the biggest housing bubble ever and what will happen next. Download the latest RTD Crisis Report, Real Estate Bubble Bursting, The American Dream Destroyed, from the link in the description. Share what you think in the comments, and subscribe to get more videos like this here.